A profit and loss statement is probably the most important piece of information in your business, but most small business owners have never actually really looked at one or understood how to read it. So in this video, what I'm going to do is I'm going to break down a P&L and show you a little bit about how to start interpreting your own numbers. Because the reason to do this, the reason to do financial statements at all, is to understand what is happening in your business so that you can then make better decisions going forward. And this gets into an extremely complex topic as far as how the finances interact with your forward planning and how that interacts with your tax planning. But for what we're doing here, we're just going to be reviewing the basics. So fundamentally, there are three different categories of item inside of a profit and loss statement. Now here we have just two. There's revenue, which is an income account, and there's expense. And obviously expense accounts consist of things you spend money on. And the third that's not on here, which is really not the use case for Bookkeeping Buddy, is cost of goods sold. So if you're a reseller and you're doing e-commerce, or you have to buy a thing in order to then sell a thing, that is your cost of goods sold. So for service businesses or for businesses that don't buy to resell, cost of goods does not apply, which is these days most businesses. Back in the old days, most businesses were product-based and had costs of goods sold, but that is just less and less true as the service and knowledge economy has developed over the last 50 years. Here we're looking at revenue and expenses. And the difference between the two is your net profit. So this is the thing everybody wants to look at, a net profit or loss. In this case, we're looking at $22,000 worth of revenue, and we're looking at $30,000 of expenses, and that leaves us with a net loss of minus $8,188. So our immediate feedback from this statement is that's not good, right? Because we want to be a profitable business. We want to be making money. So that's fundamentally what the purpose of business is, to generate a sizable standard of living for the owner, really. Yes, you're going to have whatever mission the overall organization has, and yes, you want to serve your clients and customers. But in the end, if it does not generate net profit for the owner, then it will not continue. I often say that a profitable small business is the only sustainable thing humanity's ever invented. And the reason for that is because it aligns the natural incentives of everybody involved. The customers are buying a good or a service, and they are getting more value from the utility of the good or service than the utility of the money they exchange for it. Everybody involved in the production of the good or service is being paid, and the same thing applies to them. And the owner is going to be compensated for the risk of operating this business, and is getting enough compensation in order to keep doing it next year. So a profitable small business is the only thing where everybody all agrees that they're better off after the event happens than before. Charity doesn't have that kind of alignment for staying power. Government actions are not, because if nobody charged taxes, nobody would volunteer to pay taxes, because it's not something that leaves everybody better off. Some parties better off, yes, but not everybody. So this is important stuff, basically. So as a small business owner, what do you do when you get this information? Most people just file it in a drawer or a virtual computer drawer. But what we really want to be doing is we want to be analyzing our businesses to make better decisions. And I know I've said that several times throughout all these videos, but it is really important. And this is why if you look at Wall Street firms, they're not reporting their quarterly results for tax payments, although that is included. They are reporting it so that people in the market, in the stock market, can make decisions as to whether to buy or sell the stock based on the financial performance and the expectations of the future. And you can't do that unless you have the numbers in the first place. So the books are the source of truth in your business as to understanding what is going on. It's better than the bank account balance. It's better than your gut feeling of how things are going. This is the reality as reflected in these statements. What I like to do is I like to look at the monthly and or the compare months. And what I want to do is I want to look at trends. So in revenue. Is revenue going up or is revenue going down as time evolves and passes? So in this case, we have $10,000, 10,047 of revenue in January 26, and February 26 had revenue of 12,587. And so that number went up. Generally speaking, that's good, right? But here in the expense accounts, now in this demo account, I just had a couple dummy expenses in the January 2026, but the February 2026 numbers were based on an actual statement. And here, the total operating expenses for January were only $89, and in February they were $30,734. So if this were the whole picture of my business, what happened? What story is this telling me? In January, I brought in a bunch of money and I spent none of it, which is relatively good. But then in February, I brought in more money, but I spent multiple times that amount in expenses. So that's not great. And obviously, you want to be mindful of all of them, but you want to start to look at things in a percentage of income kind of basis. So if my 12,587 of revenue is like what we're comparing to, our 14,780 in professional services is way too high, right? It's just not functional. Now, maybe my business is such that it takes a lot of time for a sale to process through and be provided for. So maybe the 14,000 reflects services provided from both January and February, in which case that starts to make sense because now I've got 22,000 of revenue against this $14,000 expense. But there's more, right? There's also a $12,000 software expense, and there's $1,655 in supplies. You have to, once you start looking at these numbers in relation to themselves over time and in relation to the revenue, then we start to understand our picture. And obviously every business is different, right? So the way things are done, the things that are being sold, all of that is going to be unique to your own business. But by looking at the numbers, you can start to ask these questions of yourself. So what I recommend is a monthly money date, where you sit down and you look at your numbers in 3 different timescales. So you do your bookkeeping for 10 minutes, right? And then we say, okay, month over month, how are my numbers doing? How is revenue going? Is it going up, down, sideways? And then the most important question is why? Why did revenue go from 10,000 to 12,000? What happened? Was it just seasonal? Was it just a lucky customer? Was it I did a marketing initiative and generated more sales? And so write that down for yourself. And then we go through expenses month over month and establish whether they're going up, down, or sideways. And again, why. And then obviously that will lead to your net profit, up, down, sideways, and why. And if you do that for month over month, a rolling quarter over quarter, meaning the last 3 months versus the 3 months before that, and a year to date versus year to date. So January and February of 26 compared to January and February of 25. Then you'll start to have a real picture of what actually is going on in your business between individual activities that you're doing now, seasonal trends, and just the quarterly flow of customers and expenses and everything, because different things get captured in different time frames. And this actually led me to develop a system that I call the Clear Path Framework for when we can start to do these analyses on a regular basis. But that's a whole different piece of software that isn't done yet. But it starts to aggregate revenue and expenses into different meta categories. And the categories are revenue, fulfillment, which could be cost of goods, but it could be cost of services if you have a service type business, which is, again, more and more common. Customer acquisition cost, OPEX systems, OPEX meaning operational expenses, and OPEX people. And depending on the scale of your business and kind of what your 12-month projection is in terms of revenue, then there's different ratios that are appropriate in those different regimes. And you can look at the ratios in that month over month, trailing quarter over quarter, and year to date over year to date framework. And you get 5 different comparisons in 3 different time frames, which gives you 15 real solid pieces of information for analyzing what is going on in your business, so that you, from your meeting last month, you had a plan and hopefully you implemented that plan. Then you can start to see, did I actually meet the goals of my plan, or did I not? Or did I exceed it? And When you have all of that context, then you can start to make real powerful decisions in your business. Because here's the secret to small business: do more of what is working, do less of what is not working, and repeat that over and over every month for the next 5 years. If you do that, I guarantee you, your competitors are not, and you will do a lot better and put them into the ground. That's it, right? As simple as it sounds, do more of what's working, do less of what's not working. But in order to identify that, you have to know your numbers, right? It can't just be, oh, I wake up and I look at my bank account and there's money in there, or, oh, I wake up and look at my bank account, there's not money in there, I better go do something. That's not good enough. That's the flying by your seat of your pants. And when people operate their businesses in that flying by the seat of their pants way, then they end up, on average, they'll muddle through. Maybe they'll make enough to stay in business next year, but the statistics bear it out. The average business does not survive 5 years. Why is that? There's lots of reasons, but fundamentally, there not enough profit is generated in order to continue doing it. So you have to be mindful of what's going on in the business from a profitability perspective, which all starts with the P&L review. So I hope that helps. And over time, I will start to show you more and more of the ClearPath framework and how that actually works as far as doing that meta categorization and what's appropriate for different revenue levels. But the first step is using Bookkeeping Buddy. Go to usebookkeepingbuddy.com if you're not a customer already. It's super cheap. 3 different price plans, $7 a month, $49 a year, or $149 lifetime for those people who never want another subscription in their lives. It's really powerful, and it allows you to do your books in 10 minutes a month so that then you can free up your brain to actually look at your numbers and make better decisions. All right, I'll catch you guys next time.